The cryptocurrency market is surging. BTC and ETH have been getting a lot of attention. The recent BTC price record high after a downward trend. ETH also has a new trend due to the approval of spot ETFs. They move through volatility and consolidation. What is its development trend and market performance? Let's dig deeper, find out. After the BTC price hit an all-time high of $73,000, with a large number of long-term holders started reallocating their BTC assets, the pressure on the seller has decreased significantly. Current BTC is not far below its all-time peak. Continue to consolidate, and long-term investors have also started since December 2023. For the first time, we started to reaccumulate BTC assets. At the same time, with the first ETH spot ETFs, historically approved for listing in the US, ETH prices increased by 20% accordingly, although since March, the price of BTC and ETH has been fluctuating slightly, arranged horizontally, to after an all-time price peak. The market for these two assets, still after a long period of consolidation, has shown relative strength, gained momentum to rebound. After all that has happened since the FTX crash, after the BTC price bottomed out 20.3%, the price of BTC is beginning to climb back towards its historical peak. It reached $71,000 on May 20th, compared to the past. The pattern of price retracement in the uptrend of 2023 to 24, it appears to be very similar to the pullback seen in the 2015-17 bull market. The uptrend in 2015-17 occurred in the early stages of BTC. There were no derivatives available to analyze the asset class at the time. But now we can compare that to the current market structure. The analysis shows an upward trend in 2023 to 24, probably mostly from the spot-driven market. The long-term inflows of cash ETFs in the US are evidence of this, since that low, generated by the FTX collapse, compared to previous cycles. The adjustment range of ETH is significantly smaller. This market structure suggests that, between each successive pullback, market resilience is increasing to some extent. At the same time, downside volatility is also decreasing. However, it is worth emphasizing that the recovery speed of it is slower than that of BTC. Over the past 2 years, compared to other high crypto assets, it is clearly underperforming. This is mainly reflected in the relatively weaker ETH-BTC ratio. Nevertheless, the approval of the ETH spot ETF in the United States is an unexpected development in a broad sense. It may provide the necessary catalyst to stimulate the strengthening of the ETH-BTC ratio. If we consider the BTC market on a weekly basis, rolling performance over monthly and quarterly time frames, we can see the overall performance is strong. They gained 3.3%, 7.4%, and 25.6%, respectively. To highlight those periods of particularly strong price performance, we can calculate the upward performance of all three time scales during the 90-day window, more than 20% of the trading days. So far, this threshold has been reached on only 5 days last quarter. In previous cycles, it was typically between 18 and 26. This suggests that the current market may be more cautious relative to historical bull markets. This video mainly talked about the low pressure of sellers after the BTC price reached a new high. Long-term investors reaccumulate savings, ETH due to the approval of spot ETF prices. Both prices are volatile and strong, as recovery is slow. BTC performed better in different periods. The current market is more cautious. Progress in the US matters. The next video is even more exciting.